Hello, everyone. Welcome to the market update for Tuesday, April the 19th. If you have any questions during the week or I don't get to in the live class here, make sure you send those to jerry@traderspro.com. I got a lot of emails over the weekend, so I might be a little bit late getting back to some of yours. So hopefully I'll get that caught up today. All right. The market is rebounding a little bit today, but again, we're still being a little bit cautious. Remember last week we talked about possibly being a little bit of a correction within the downtrend. We'll take a look at those charts here in just a second. If that's the case, we could, excuse me, we could get another day or two of a rally. But what we start to look for to see if we get any sort of like bearish reversal candle or something like that. Although the market's been up today, if you've watched it all day long, it's kind of come off the highs a little bit at times, and that's something to watch going into the close. You want to see it close very near the highs of the day. It can come back a little bit, but if it comes back significantly, it really shows weakness in the rally, and especially in the context here where we think we might be in a correction within the downtrend. It caused me a little bit of concern if that were to happen. I'll show you what I'm talking about when we get to the charts. But as far as the direction alerts, again, not much really changing here. We're not in any sort of extreme area. We're right in the middle as far as the momentum, the market breadth, same thing. What this tells us is it really does, as far as this is concerned, this is really looking for extremes. And so this is telling us that we could possibly have a big rally where we push to the far right side of these extremes, or we could have a big sell-off where we come all the way down here. And that's what I'm going to be showing you on the chart. We really could go any way right here. We could go either direction. And it's been that way for a few weeks. And so, it's, and you've seen the market has whipsawed. It's gone back and forth. So you are a little bit vulnerable to whipsawing conditions in the middle here, and that's why I do like extremes. Extremes very often set up the higher probability trades because they often can point to reversal points, and and that could be a little bit conflicting because you say, well, you claim to be a trend trader, but you trade, opposite directions a lot. Well, it depends on what type of trading I'm doing. Very short-term trades, very often you can, the extremes can point high probability reversals, and they may be reversals for just a short period of time, but they do usually signal higher probability trades. But most of the time, especially with your longer term trades, you want to be following the trend. Just, let that stock kind of, in other words, if I were to kind of draw this out, stocks will tend to, kind of stair step. And so if you're doing longer term trades, you're wanting to just focus on that longer term trend and ride that longer term trend as far as it goes. You're not looking to jump in and jump out. If you're doing shorter term trades, you could reach an extreme right here that give you high probability that it'll pull back. You could trade that move down. You can notice you've got an ABC right here, and at an end of a correction, you could trade a move up or trade these back and forth moves. And sometimes you get high probability signals within these moves. So again, it just depends on the type of trading that you're doing. So being right in the middle here, it's just showing that we're not at any of these extreme levels yet. Well, we are in sentiment, but we've been up in this elevated area in sentiment for quite a while. I've talked about that does. What's made me nervous and made me feel like we haven't reached a bottom yet is that we've never really gotten off of this high complacency. Both of these two bars right here, we've even on the sell-offs we've had earlier in the year, I think we barely went into trending one time, but it's been so elevated that there hasn't been any fear in the selling. There hasn't been that extreme fear, and it doesn't have to be fully extreme. I'd just like to see some high fear at least give me some sort of indication that we're at a tradable bottom, and we haven't seen that yet. So that leads me to believe that we still have more downside, not to mention the fact that the market just hasn't seemed to really reflect the impact that inflation's having on the economy, and it's got to show up at some time, and it's just a matter of when the market decides to react to it. Now, when I say the market, I'm talking about the big professional traders. I talk about this a lot, but they're the ones that move the market. They're the ones that we're trying to follow, and they're the ones that we're waiting for to decide, when they're going to react to what we're seeing as far as what the Fed's doing and these inflation numbers that come in. And who knows when they start to sell? I can't get into their minds, and it's not just one person; it's a collective minds of these large traders. But we want to look for these signals that could indicate when that's happening or starting to happen, and that's something I'll kind of cover as we look at the charts today. The buy-sell ratios got a little bit extreme on the sell side here. Sells outpacing the buys, but these aren't real. These are more extreme levels when you get a little bit wider like that. But these are, I've talked about this in the last couple of updates. It's a reflection of the indecision. It's a whipsawing that's taking place. We're not reaching real big extremes on these, but we're just kind of whipsawing back and forth, and that's tough. It's tough to trade in those environments, but we get them. You're going to get them. You just have to kind of get used to them, and believe me, if I could have the market that I like to have, an emotional market, it's easier to read these whipsawing conditions. I'd love to know when they're going to happen. I wish they were predictable so I could take nice long vacations when they take place, but you just have to kind of deal with them when they occur. Sentiment is pulled back. We're right in the middle here. So again, we're not at any sort of extreme level. We could go either way. Let's get to the charts here. And I can add to what I talked about last Thursday. So last Thursday, we were looking at a little bit of a sell-off day right here. We had a rally. So you can see the whipsawing. These are pretty big candles. So they were big whipsaws back and forth, and it gets frustrating. This day right here on Wednesday, it looked like a bullish reversal after a drop we had. Looked like we could bounce at least for another day or two. We came right back down on Thursday. Had a little bit of it looked at first like it could be a bullish reversal because it opened lower and closed higher than where it opened after gapping down, but it ended up being more of an indecision candle, kind of that spinning top. So again, it didn't really provide any strong tradable pattern there to really get aggressive with. Today we're up, but again, we were up back on Wednesday. And we're right at the top of this range here. Are we going to see it whipsaw right back down tomorrow? I don't know. I mean, the way it's behaving, it could do that. I'd like to see it kind of break out above here to get a little bit more confident with buying. But even then, this whole price action moving sideways after a drop, you hear me say, whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. Again, keywords there, more likely. It doesn't mean it has to or it's guaranteed to. It's just probability. And another keyword there is when it's done moving sideways. It can move sideways for another week or so, and we've been in these long sideways periods before. But what I'm kind of looking at is, because I think I'm leaning more to the bearish side because of this drop, what I'm looking for is to see if we get like a gap up, and then it trades lower. So it trades lower for the day, but still it's closing higher than the day before. And so it's showing the market is up for the day, but the weakness is showing in the candle itself. that we're closing lower than where we open. We gap up, and then we're closing lower than where we open. That could be a signal of a drop that could be coming out of this, the context of all this. And so I'm going to see if that does take place. Now, a few updates earlier. We also talked about, back in here, we were talking about the possibility that this could be a bullish ABC pattern, and that maybe we do rally back up a little bit. Let me go to a larger chart here to provide a little bit of context. So the possibility here was that, again, this is all built on the fact that I don't feel that we bottomed right here, that there wasn't enough fear in the selling, in my opinion, that this has put in a major bottom. It just hasn't corrected enough of that run we had from the 2020 lows up to this peak up here. So, the other possibility is that this is just wave A of a larger correction. And then this is, first I thought maybe this is wave B, and it still could be the case. And then you're in wave C, which could bring us to that level where we get that panic selling. And to get the panic selling, I think we need to go, I definitely believe we need to go below these lows. Everyone's looking at that as the bottom. So if you drop below that, that's what creates this feeling of, well, wait a second, what's going on here? How much further we're going to drop? If that's not the bottom, where is the bottom? It creates all those emotions that usually put in the bottom, actually. So now, but another possibility is that we're still forming wave B. This can still be wave A right here, but this is a larger bearish ABC pattern, wave A, wave B, wave C, to create that larger wave B. And actually, that maybe we do try to rally back up. We can't exceed the previous all-time high, but we rally back up close to it. Actually, there's a possibility you could exceed it in Elliott wave if it's a wave B, but typically it wouldn't. But where it could possibly rally up into these levels right here. Now that would definitely suck in buyers and definitely increase the panic if you did finally get a wave C coming down, because everyone would start to believe up here that the worst is behind us. It's safe to buy. It would suck those people in and then really create that fear on the sell-off. So now, why do I do stuff like this? Why do I start drawing all this stuff out? Again, my job is not to try to predict the future. What I try to do is forecast, and forecast means you got to make adjustments. I think of a weather forecaster. Well, he might predict that, or he might forecast sunny weather for tomorrow, but then something could happen in the models that changes that, and suddenly I don't know. It's been several years since my meteorology class I took in college to satisfy my science credit, but whatever takes place could happen to show that it could rain. Well, he's going to adjust his forecast now because of those new inputs. Well, we do the same thing with chart analysis. We analyze different possibilities here, and the reason why I do this is so I'm not caught off guard. I've taken a look at, okay, if we don't drop right here, what else could be going on? Because I still could take advantage of it. If we're looking more likely we're going to rally up into here, well, why not get into some bullish trades? Let's add a little bit more risk into the portfolio, and let's take advantage of that. Let's profit from that. If it doesn't, if it starts to show a higher probability that we're gonna drop right here, then let me get out of some trades in the portfolio, or at least really monitor them, tighten up stops, things like that. I don't have to just jump out of things, and maybe get into those inverse ETFs that we've been using to really boost the portfolio during the latest drop. So that's why I kind of go through these and teach here maybe a little bit of Elliott wave in the process of how some of these things can end up playing out. So now again, if this is a correction within the downward move, if this is kind of a wave A, wave B in there somewhere, we could get a wave C that comes up here a little bit. Where would I start to believe that we're more likely to go up than this being a correction for a move down? Well, I would probably look at about the halfway point right in through here on this drop. Typically, stocks tend to retrace about 50% of their moves. So if this is the start of a bigger move down, and then, if it rally up into this area right here, that could be the end of it, and then maybe get a bearish reversal candle. If I see something like that in this area, anywhere in this area right here, if I see any sort of bearish reversal candle, it can indicate it can move lower. But if it shows strength and breaks out above here, it breaks above that halfway point. Now you have to at least adjust and at least changes the probabilities. You can have a deeper retracement and still go lower, but the chances of that happening start to diminish. And so you at that point, I'd probably start to think it's more likely it goes higher. Now, a lot of that also can depend on how strong the candles look. Are they closing near the highs of the day? Are they fading a little bit off the highs? Those types of little things like that can be clues as well. We could also look at the other indexes, although Dow looks about the same, the Qs. Well, Qs, one thing that would tend to happen, again, when the market is strong, always remember this, usually when the market is strong, it's fueled by risk taking. Those professional traders are more apt to take on risk. And so as part of this whole process, without going back to the S&P chart, if they're confident, then not only are you going to see the market rally beyond that kind of halfway point of that drop, but you're going to see chip stocks make a strong comeback. You really watch that SMH chart, because if it looks like the market's taken off and those stocks are lagging still and they're showing weakness still, then don't trust the rally. It's not likely to, from a probability standpoint, it's not likely to follow through. It's sucking people in. It's a sucker's rally. Transportation stocks, you see them really start taking off. Now, we have seen them rally a little bit off the lows. We'll look at that chart here in just a second. But that's a sign of professional traders seeing being a little bit more confident in the rally there. Small caps, I always talk about the small caps being a leading indicator. You'd want to see them outperform. So if the S&P was up 1% for the day, you'd like to see the small caps up 2% or 1.5%, having a better day than the other indexes. That's a good sign that the trend is healthy. And then the flip side would show that it's a weak rally. If the S&P is up 1.5% and the Russell 2000 is only up 0.5%, that's a sign that something could be wrong, and that there's not that risk appetite to get into those small cap stocks. So those are all part of the process. You have to kind of analyze everything. And even then, it's not crystal clear, but at least it gives us a better idea. It gives us a little bit of edge over people the vast majority of people that don't know how to read that stuff, and that they're picking their stocks off of whoever they follow on CNBC or whatever newsletter they get, and they're at the mercy that the person offering that advice knows what they're doing. All right, at Qs I'd like to see the Qs be outperforming as well. Would be a good sign. And then, like I said, the Russell 2000. Now, as I mentioned many times, but for those that are maybe new today, we want to go to a long-term chart of the Russell here. This is a key area we want to be keeping an eye on, because we moved sideways most of last year, but we found support along this area here. We broke down below it, and then we bounced off of it as resistance a few times. And right now, what we're seeing again this drop, and this is moving a little bit more sideways. The fact that this is sideways after this drop, it's showing it should have another move down. But if it does get back into this zone, back into this area here, and that would be a lot more bullish. So, I think all this would start to happen around the same time. Those other indexes getting up towards those recent highs, and the Russell 2000 getting back into this range here. That would definitely be a cue to get a little bit more bullish. Now, all this stuff can, again, I'm not talking that this stuff is immediate. It can sort all this out over weeks, and so just be aware of that the day-to-day stuff. We do try to look at candles, and look at day-to-day stuff, but the overall trends could develop over a period of time, and it doesn't mean that we can't take advantage. If it looks like maybe we wouldn't drop for a couple of weeks, doesn't mean that we couldn't take advantage of a near-term rally with some of the trades you get into in the portfolio and things like that. And again, one of the things I like about the way the portfolio is set up right now is that we've got a lot of stocks that have been outperformed, that have been moving up when the market's been going down. Oil stocks and aerospace stocks and things like that have held up really well. Now, eventually they may start to reverse that trend, and we might have to move into. But I don't assume that would happen until there's more of a risk-on appetite, because that money, if they're getting out of aerospace and oil stocks, they're only getting out of them because they want to get into something else, and it's likely to be those tech stocks and small cap stocks, and that's what typically ends the rally of stocks that are outperforming during downtrends, is that they want to go into something else. They want to ride another trend up. All right, so keep an eye on the Russell 2000 there. Bond yields continue to go higher. Bonds continue to drop lower. Now, I'd be careful about wanting to short bonds right here, because we are in an extreme. We're probably due for a bounce. I said that last week, and we didn't get much of a bounce. We didn't really get a bounce. We kind of moved sideways for a couple of days, and then we're back down to going lower. But we're right back into that extreme reversal risk, pretty much to the far left side of that range. So I would, at some time here, we're gonna see a little bit of a bounce in bonds. Maybe not a change in trend, because in this case now you'd have to probably get above this high right here. That was the last lower high. You have lower highs, lower lows. This is a lower low down here. If it starts to rally, it would really need to get above this high to signal a possible trend reversal. Again, it had at that point still a possible one, and then maybe pull back and give a higher low. And now it could have another just bounce and then go lower, and then that would be the lower high it would need to go above to kind of signal a possible end of the downtrend, and we just haven't had that yet. So we're going to assume it's going to continue to move lower until that happens. But so the trend is down, but again, note the how extremely far down it is. You wouldn't want to start shorting it right here. That'd be pretty risky, because it's at a reversal risk right now. Gold, again, if you've been trading gold, you've probably been a little bit frustrated. I mean, even on a day like this, when it went higher, you notice it opened up here and closed down here. So it was a little bit of a bearish reversal candle. Not surprising we dropped today after yesterday's kind of bearish reversal. A lot of this is moving sideways. I think I talked about the gold miners. I think in the sometime last week I talked about the GDX. This is the gold miners, although they're down a little bit today. this would probably be, if you're bullish on gold, probably a better way to go, because they're making a ton of money at these price levels in gold, and it should continue as long as gold is in this area. So even if gold the GLD is moving sideways, these companies are still doing pretty well. And this is I would look at this as just giving you an opportunity to a pullback to maybe buy into. But the GDX is probably a better way to trade gold right now if you're looking to trade gold. And I tend to stay away from commodities just because there are little nuances to commodity trading. And if you've ever met someone that trades commodities, they can kind of fill you in, or if you talk to them at length, they can share little things that are a little bit unique to the commodity markets. I mean, a chart is a chart, so most of the chart analysis you're doing is the same, candlestick formations and ABC patterns and things like that. But there are some little quirky things with commodities that so what you find is usually people that trade commodities, that's all they do. They just specialize in it. If you dabble in it, it's been my experience, and it's been the experience of friends that have done the same thing. If you just dabble in commodity trading, you tend to get beat up a little bit because of those little nuances that you're not quite used to, anyway, so that's my 2 cents worth as far as commodity trading goes. But commodities can affect the movement of the economy and other things, so that's why we analyze them in the updates. We do want to see how they're performing or trending. Oil, again, as we're looking at oil right now, oil's down again today, or down after a little bit of a bearish reversal candle. Now, this is going to be the key area to watch then, right through here, because all this is showing over the last several weeks is we're just in a sideways correction. It looks like a sideways correction in oil. There is a possibility that, because it was looking so impulsive, that could have been the start of a move down, and this is just wave A, wave B, wave C. So maybe this is a larger wave A, this is A, B, C for a larger wave B, and then you get wave C coming down, larger correction. That's always a possibility that you still get a larger correction. It's just with all the price pressures on oil and right now, it's just hard to believe that we'd see a big dip in oil. But I can see it happening though if money suddenly starts flowing into small caps, professional traders taking money out of the oil stocks and going into riskier trades that have been beaten up. But again, I don't have the confidence yet in what I'm analyzing to think that's happening. So I'm going to be watching this high right here and this low right here. I think if we break back above this high, it's kind of maybe a slightly lower high right here, or you call that an even high. But if it breaks back above there, it's breaking out to a higher high, which would mean, especially if it does it within the next few days, it would make a higher low somewhere in here, depending on when that low puts in or takes place. And so it'd be acting still like an uptrend. If it breaks below this low, though, it would go to a lower low, and that could be a signal of maybe just what I talked about. Maybe this is a wave C, and there's a lot further downside there. I may not wait for it to go that low on some of the oil trades I'm in. I'm looking at probably the previous lower low or higher low on the uptrend, and if it breaks below that, I'll probably stop out. I'll show you when we look at the portfolio here in just a second. The dollar continues to move higher. That makes sense with the weakness in commodities. The dollar and commodities tend to move in opposite directions, not always. But we are an extreme reversal risk here on the dollar. Keep an eye on that we should get a little bit of a pullback or consolidation soon. We had a consolidation through here. We could see something similar where it just kind of moves back and forth a little bit. this was the last higher low right here, so it would have to come below that to really signal potential trend reversal. That'd be a pretty long way to really, and it doesn't have to go all the way down there. If it started to drop in a sharp way, like I said, and it got past kind of the halfway point, the halfway point also lines up with this area of resistance right here. So if we drop below this area right here, and especially if it did it in like a straight move down, that would signal the potential of the trend reversal. A number of trend reversals, you tend to get impulsive moves up, impulsive move down, followed by impulsive move down. So you're stair stepping up, impulsive, corrective, impulsive, and then you get impulsive up, impulsive down, and then corrective. That tends to be the behavior. And then you get impulsive down, impulsive up. That can signal potential bottom. So those are things I'd be looking for if the dollar starts selling off a little bit. But again, it's showing it's in a clear uptrend, but it's at extremes. So you wouldn't want to be buying the dollar right here, and it'd be too risky to short the dollar yet. I don't see any signals. Well, you could say that today's a little bit of an indecision candle. Could that be signaling a potential pullback? Maybe a very near-term pullback, but I don't know if I'd want to short it right there necessarily. I'd want a stronger bearish reversal candle to short something like this, where you gap up, and then close lower, although higher than the day before. That's a stronger bearish reversal candle. The VIX. One thing I do want to point out on the VIX. VIX is down today, but one thing I want to point out, and this again, this is the ETF that we have to use on Traders Pro to kind of look at the VIX, but it doesn't always reflect exactly how the VIX indicator looks. But what happened yesterday is we opened lower yesterday. Let me pull up the S&P chart real quick. We gapped down a little bit yesterday right here at the open. And the VIX gapped up, as you would expect. That would be the normal relationship. But within just right as soon as it gapped up, the VIX started to come down. And actually, the S&P traded a little bit lower. It traded a little bit lower here, but the VIX was coming down, meaning to me that the professional traders weren't that concerned about that gap down, that open lower. That was actually kind of a bullish thing that was taking place, because usually you'd see the VIX moving up if the S&P was dropping lower, and it wasn't. It was coming down. And at the end of the day, the S&P was basically flat. We closed right about where we closed on Thursday. So basically we were just flat as far as the index was concerned. But again, when you look at the VIX, we were clearly lower than where we closed on Thursday. So again, this is a real subtle thing. I tell you all the time that you got to be careful not to assume the VIX is telling you something every day. But I thought that was a little bit unusual that the VIX was showing that there was a lot less concern off of that selling. It really showing no concern of the selling, with the fact that it was coming down all day, and the fact that it closed lower. The VIX closed lower than it did on Thursday, even though the market closed flat. It just, not surprised that we rallied today. I guess I could say, based on how that VIX was acting. And so with the VIX coming down again today, it's looking like we should rally for another day or two. But one area I would be concerned with is we're getting close to an area where we've seen some bounces before. Here it dipped a little bit below that area. But so do we get, so tomorrow again, if we gapped up tomorrow, the VIX would probably gap down. Does it gap down to this area right here? And then do we see the market sell off and reverse and see the VIX move up from here? That would be a pretty strong bearish signal if it plays out that way tomorrow. That's something I'd be looking for tomorrow. chip stocks, again, told you to watch this as well to see if you have some trust in the rally. Off the highs a little bit today. Let me check the QQQ chart real quick because I mean we've been talking for a half hour, so that you might see the same thing in the QQQ chart. Yeah, it's come off the highs a little bit too. I think that's important. And where it's at right now, that's a little bit too far off the highs that I'd want to see if it were to close that way. Doesn't mean it still couldn't go higher tomorrow, but usually the first day when it starts taking off, it closes near the highs of the day. Maybe a little bit. See, this one here is a little bit off the highs of the day. But can you see that? It at first look, you don't really notice that upper tail right there, right? This is a little bit more noticeable. Now, again, this is not something I can really quantify. I'm not trying to say, well, a certain percentage. This is just visual to me, but I'd want to see that a little bit closer to the highs. See, here's an example here. So here it ran up, but that was a little bit too far off the highs of the day, and it didn't continue. It came right back down again, and we were already talking about whipsawing conditions in this area here. Although this wasn't too bad off the highs of the day, and it still reversed the next day. So sometimes you just can't know for sure what's going to happen. But anyway, that's something I would look for. And then, the SMH, I'd want to see a little bit more strength out of the chip stocks. But you can see the chip stocks are already they're already at these lows. This is the main bullish reversal day that I keep talking about, and we did go below. We've gone below that a couple times. We went below it here, and now we're still below it here. That's another thing to look at because that low of that day, we touched it today as the high. Can we break out back above it? Or do we try to break above it tomorrow and then, get a bearish reversal candle out of it right in that area? Those are things I'll be watching for tomorrow. Transportation stocks, you can see they've rallied off. They really got beat up, but there again, they moved below these reversal days. There's that February reversal day right there. We broke clearly below them. Now we're kind of rallying back up to it a little bit, although today it's kind of breaking above that area right there. This is clearly impulsive coming down. This is a little bit choppy as it's rallying back up. So I wonder if that's kind of wave A, wave B, wave C. Again, we are off the highs of the day, but I don't see any bearish reversal candle there. If we got a bearish reversal candle, it could mean that it could start another move down. But this is something just to keep an eye on. Because maybe the transportation stocks have a couple really big up days. That could change my outlook a little bit, change my forecast a little bit. And Bitcoin. Now, Bitcoin, I'd be very careful. I mean, it's had some rally days here recently, but again, put it in context. If you look at a 1-year chart, actually like a 2-year chart even, this is moving sideways. This previous move was down. It could be maybe forming a bowl where it starts to, you can get these bowl-shaped moves where they're back and forth through here and they just kind of keep working their way higher. You see me show that chart to you a lot of times on some of these individual stocks. But you do also have to be careful that this is not a correction for another move down. So I'd probably want to see us get back above these levels here. This was support back through here on that uptrend, or a little bit of resistance through here. Try to keep having higher lows and then see if we can break to higher highs. that would give me a little bit more confidence. So the problem is right now it could go either way. I could see it going either way. You'd want it to maybe break out above here. That'd give you a higher low right here and then higher high. And you might have a better chance that you're dealing with kind of a bowl-shaped bottom. So bottoms sometimes, so tops typically are sharper. You stair step up, usually your tops are going to be a little bit more pointy. They might have a couple of attempts to go higher and then come down, but they tend to have a little bit more of a pointy look to them. You might have heard me in a training before talk about volcano tops. It's very rare that you'd see a stock move up and then move sideways like this and then go higher. It's possible, but go lower. It's possible that it could happen, but if it does drop, it would give it more of a volcano top look. It's just one of the names I come up with. If typically when it's moving more sideways like that, it's more likely to break out higher. Bottoms though can be different. You can have a sharper bottom where it's stair stepping down. You get impulsive down, impulsive up, kind of a V-shaped bottom. But you can also get these bowl-shaped bottoms where it takes a little bit more time. And so initially it could look like it's moving sideways for another move down, but it could start to just work its way up and it's more of a bowl-shaped move. Now, how do you tell, or what's a good way to tell that what the sideways move is leading to another move down? Well, usually that bowl will start to form after a big drop. So you have a stock that's been moving up and then it comes way off the highs. And now it's moving a little bit more sideways. There's a much better chance that it's basing right here for another move up and going to give you that bowl-shaped move. If it were to come down just a little bit and then start moving a little bit more sideways right here, there's just much greater chance you're still going lower. You're not really forming a bowl right here. I wouldn't trust a bowl right here because it's not deep enough, not a deep enough retracement or pullback of that previous move. And you probably got a more likely to get that next drop down. But that's what I would be looking at with Bitcoin. Be a little bit careful there. You want to see it break above those recent highs to get a little bit more bullish. All right. Let's quickly look at the portfolio. I got a question this week about wanting to see the trading history. What I'm going to do is I'm going to go through the normal update here, and then right at the very end, for those that want to stick around, or for those, because this is being recorded, I'm just going to slowly move down the trading history since I started doing this. Okay, so we started portfolio back in, it looks like what was the first? Oh, there it was. Yes. July 29th of last year. And I'm just going to slowly go through and pause just so it gets in the recording. And then you can go through the recording. And if you want to track everything I've done, you can see when I got in, when I got out, how much I made, how much I lost. It's all right there. But I'm just going to show it to you, and then you can do the work if it's meaningful to you to do the work. So I'll do that at the very end, and so that those that want to take off and don't want to go through the boring stuff of seeing it. Anyway, I think it'd be boring, but obviously, so that you can take off if you want to at that point. Anyway, so I did get out of. Well, let's go through the current holdings here. I'm still I got out of the hedges, the inverse ETFs. I'll show you those in a second here, but I'm still, so the oil stocks, here's OAS. I'm not worried about it being down today. I still like, you're still looking like a kind of a wedge-shaped move. It should break out higher, but if it doesn't, we'll stop out below this area right here. Let me switch the signals on here. I'll probably look to stop out if it goes below here. And remember on the oil chart, I showed you that that area of USO that would make me think that maybe there's a bigger correction underway. It's not that far away on some of these stocks, so I wouldn't be giving up too much of the gains if it were to come back down and reverse. Let me go to portfolio here. Same with the defense, aerospace stocks. They're just kind of moving sideways through here. I think we should end up breaking out higher. I'm not too concerned with these charts right now. Lockheed Martin was it Lockheed? Yeah, Lockheed had earnings today. They beat on their earnings, but their revenue was a little bit off from their. But it's not reacting too bad. Not getting a big gap up or down on this. A little bit of a gap down, but the chart still looks pretty good. LHX, another aerospace, and they're a little bit bearish candles today, but I don't see anything that would cause me to jump out. This is a medical stock, but it still looks fine. It just looks like it's in this bullish corrective pattern right here. At least it looks that way. Previous move was up. It's had a history of forming some of these longer sideways moves, so we just have to wait and see if it starts taking off again. I think I have my stop down below here, so we wouldn't be giving up too much if it were to stop out. Marathon still it's moved a little bit sideways, but still looks like it's acting still like it wants to go higher. Devon, same thing. Now, Alcoa moved down today, but I like the overall pattern here. This looked like a bullish ABC pattern. I think my stop's right below here, so if it does dip below that, I'm willing to have it come down that far before I look to stop out of it. That's why I know I'm probably wrong on that pattern if it dips below that low. U.S. Steel looks okay. Yeah, it's still kind of forming the sideways, looks like a sideways correction through here. So I got out of SOXS on was it yesterday or yes? Let's see. I can't remember if it was yesterday, Thursday or yesterday, but chip stocks were showing that they could bounce a little bit, and so which means this will go down if chip stocks go up. So I remember I'm not basing this off of the chart pattern, or I am basing off of the candles. The purpose of this was just as a hedge if the market were to drop. Now we could jump back into these if the market looks like it's going to drop again. These are going to move higher. This might just be a correction right here for another move up. And if we do if I see a bearish reversal candle on the S&P, all that stuff I analyzed earlier, I'll jump right back into these again because they did very well for us when the market dropped that last time. So if they continue to move higher, we want to profit from that. And then I got out of SARK today with the strength of that NASDAQ open and the small caps. A lot of Kathy Wood's ARK Innovation Fund, ARKK. This is the opposite of the ARKK. She has a lot of these small cap, not all. There are a lot of small cap tech stocks in there, but she has a lot of Tesla. She has, I'm trying to think of all her holdings, but this had a little bit of an uptick today, a little bit of a bullish candle day. Again, it could bounce or rally, and so I went ahead. And so the opposite of the ARKK is what I traded, which is the SARK, the SARK. And it had a bearish reversal candle today, a little bit of a bearish engulfing. Now I got out near the open just because of the fact that it was looking like the chip stock or the NASDAQ would rally, and I was anticipating it was going to have a little bit of a bearish reversal candle there, so I got out a little bit early on that one. But Again, I could jump back in it again if it looks like the market's going to drop. Go over a couple stocks here. I don't want to go over too many because I always go. If I go over too many on the market update, then sometimes I don't have anything to go over on the stock specific class, which is what Thursday is supposed to be all about. But I know that a lot of you tune in specifically for a stock to consider, so I try to do something at least. I'm going to move down the list a little bit though, because a lot of these up here we already have in the watch list. But computer and technology right here. I like this pattern on Fortinet here, FTNT. This is a security software for computers. A lot of these stocks have done pretty well with, the threat of Russia hackers doing some damage to the U.S. economy, but I like the impulsive move up right here, a little bit of a V-shaped move where it dropped, something moved up, and then it's just kind of been moving kind of sideways here, a little bit corrective. And it's moving corrective right at a breakout here. So it dropped here pretty quick, moved up here pretty quick, but it's consolidating along here. That's usually a good sign that it's getting ready to break out. You'd probably have to look at this previous high up here as another target area. If it does break out, it could do the same thing, start moving sideways in that area again. But this could make a run and maybe wait for it to go back to a buy signal. There's a little bit of confirmation, or you could wait for it to break out as confirmation. Either way, that'd be a good one to put in the watch list. So I'm going to go ahead and add that in. And then under business services, down here, I think I already have this one on the watch list, but Avis, ticker symbol is CAR, 98 strength rank. It's got a really nice kind of bowl-shaped move to it. A little bit of a bowl right here, started to take off right here, and then it's looks like kind of a cup with handle formation. Usually with these cup with handle formations, if they break out, the rule of thumb is they tend to go up about the same distance as the top of the bowl to the bottom of the bowl. So you can kind of take that distance, project that upward, and you're talking, maybe the 420 area if it can break out. Now the key is when it breaks out, that's the target. It doesn't mean it goes straight there. It could kind of stair step its way there, but something doesn't become a rule of thumb. If it rarely happens, it tends to happen a lot. So you tend to have confidence that it can make that type of a move off of this type of a pattern. But it is flashing a buy signal today, but you could wait for it to break out first as additional confirmation, which I would probably consider based off of the analysis of the market conditions. It's possible we could still have another move lower. I wouldn't want to be jumping into too many bullish positions without some confirmation just yet. But or if I could just get a little bit of additional confirmation, it might be smart to do that. And another one in business services is SWCH switch, 94 strength rank, and gone to a buy signal. It'll end up going to the buy. As we're looking under the holds, remember the system updates overnight, so this should close with a buy signal and then should move into the buy signal category tomorrow. But coming out of a correction right here, it looks like it should be taken off right here off of that. That's good. Looks like a nice little pattern there. So in other words, notice again how most stocks tend to trend, and again the key word there is they tend to trend this way: impulsive, corrective. Impulsive. This is more corrective, more like a step. And what should happen is it should take off again, just like back here. When it broke out, it took off again. That's kind of what you're expecting, the same thing to kind of happen there. Obviously, you probably need some market conditions to help with that to really take off. But you never know when that's going to happen, so that's why you trade the trend until it changes. But that one looks pretty good too. All right. That's all I have. Again, just to kind of recap, we're trying to see if this rally In fact, let me just check on it real quick here. The S&P, see if we faded at all. I've actually rebounded pretty good. That's not a bad close right there. If it closes right there, you got a little bit of a tail, but not too bad. So we'll see what happens this last hour and how we close. But again, we're still a little suspicious of the rally. Is this kind of sideways move? Is this setting up for a bigger move down? Or are we going to get a pretty good rally up into this area, up into here? We'll see what we want to keep an eye on, this halfway point. If we can break above there, that'd be a little bit more bullish for the market. Let me draw that a little bit better. If it fails to do that, rolls over, be a lot more bearish for the market. Well, we should have a little bit more clarity on Thursday and see how it looks on Thursday. All right, that's all I have. Again, for those that want the full trade history, I'm not going to be talking. I'm going to try not to talk through it. I'm just going to try to just show it. Now, what I'm going to be doing is I'm going to show segments and then pause, so that when you're reviewing it and you want to get it down yourself, what you'll do is on the recording, you just hit pause on the recording and then look through all the whatever the history there is, and then you can unpause it. So I'm going to start right here on July 29th. That's when I started the portfolio. And down here, we're going to scroll. So I'll leave that on the screen for a little bit, and then I'll go down to the next group. I'll try to have a little bit of overlap so you can make sure that you are getting them all in order. So for the rest of you, again, have a great week. We'll see you on Thursday.